What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief Show. We're doing a weekly recap. If you're new here, welcome to the show. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. In the weekly recap episodes, we're looking at some longer-term charts. Now, the S&P 500 hit an all-time high. The Dow Jones hit an all-time high. We have some very interesting stuff taking place. Very, very bullish-looking charts. All right, and then there are also some bearish things to consider. Now, we like to look at the bearish view and the bullish view because it gives us a better round out picture. So it doesn't force us to one side or the other, but it allows us to make decisions understanding both perspectives. Let's get into today's show. Alrighty, welcome back. Now, before I hop into this, I just want to state there's going to be timestamps in the description below. So if you want to kind of jump around to different sections, feel free to do so. However, there are some interesting parts. I'm bringing in indicators within each of the indices sections. And in the indicator section, I'm going to be going over some some interesting stuff, both in the Russell section and in the stock market indicator section. I have a couple of charts that were pretty interesting. So with that said, let's just go ahead and hop right into it now. First off, I'm looking at the weekly performance for the 11 sectors in the S&P 500. All right, guess who's leading the way? Technology and consumer discretionary. If you've been watching my show for a while, you know, last week, 2 weeks ago, we've been saying that the consumer discretionary looked like it was going to be taking a lead because of that whole Archegos blow-up thing. And it seemed to me like it was pulling down in the 50-day moving average. It was still relatively strong from a relative rotation graph, which we'll get into. And what do you know? I mean, it's been performing very well. This week alone, almost up 4%. Now, what's interesting to me is this. Look here at the bottom of the chart. That's energy sector, okay? So energy is the weakest performer for the week. Now let's go to the month performance. Energy, the weakest in the month, down 6%. All right, look who's leading the way, consumer discretionary and technology. Why? Well, we called out that these have been the stronger performers about a week ago. But this is what's getting interesting to me is this energy, because I do personally think that this is a pullback within a larger trend. And this to me looks normal because now what happens when we go to a year-to-date perspective? Whoa, energy leading the way big time. They're still up 28% for the year to date. So this last month, this last week of performance, you can see it's in a drawdown. And that makes sense to me actually from a technical perspective, especially when it's been up this much on the year. I mean, look how much it's overperforming. And not to mention, the energy sector, when it bottomed, if you don't follow me on Twitter, you can follow me there. We nailed the bottom. And I got to pull up that tweet. I don't have it on me right now. But we did. We called out a positive divergence building, and we said it was going to be one of the best performing sectors, and you needed to be ready for it. Were you ready for it? Maybe. But now I'm getting ready again because I do think it's going to be a strong performer. So I started building out a position. Me personally, I still think it actually might have some room to go down still, but I'm starting the position building, and I am introducing married puts to the position. If you don't know what that is, it's not a big deal, but basically what I'm doing is I'm building a floor under my position saying, hey, if it goes under this, that's the most I'm willing to lose from, a 500 to 1,000 share position that I'll probably end up building. Let's hop into the relative rotation graph. First off, energy from a weekly perspective, we're looking at a 9-week tail. So basically these little worms that are on the screen squiggling around are kind of moving into different, improving, leading, weakening, or lagging sectors. All right, and what I like to do is look at the 90-degree ones, the ones that have the dots with the tails, to the bottom left. And to me, that means XLRE, right? It's kind of, it's been tailing up. It's been improving, okay? And then XLC and XLI. So these ones look like they might be some strong performers here. Even XLF is, floating around, just hanging out and leading. But the one that's closest to the leading corner is still energy. Now, mind you, it's been drafting a little bit lower, so the relative strength has been subsiding a little bit, but it's still, a leading sector. So when we see these drawdowns take place, which we are for the last month, and it's still in an improving sector, right? That to me spells out opportunity. It says buy this dip. That's just how I see it. I could be wrong, right? But it at least aligns a lot of ideals in the favor to jump in. Now, last week or the week before, I forget when it was, we were talking about XLC, right? And we were saying, okay, well, XLC was at the bottom of the range, but it was showing relative strength still. Now, what I like more about XLC and XLI is that it's actually forcing it, it's moving to the top right here. That's a good sign versus this is moving down, but it's still pretty significantly up there. So that is one thing to consider. And then we have XLP also improving. All right, these are, like I said, these are just the 11 sectors here in the S&P 500. Now, if I pull up a chart of the SP, or sorry, not the SPY, the XLE, and I show you a relative strength line where I divide energy into the SPY. So that means when it goes down, the SPY is outperforming energy, right? And then when it goes up, energy is outperforming SPY. And you can see here since November, obviously, and then year to date, from 2021, energy has been outperforming the SPY, and now we're getting a drawdown. But what I find interesting here is actually, look at this trend line. It came up here. Previously, it was here in mid-2020, and it got rejected and headed a lot lower. All right. But something to consider here at this point, it was running into the 20-period moving average and then got rejected and moved lower. All right. Now we're above the 20-period moving average. All right. Looking at the daily time frame, now we hit the same resistance. That makes sense. Now we're pulling back into the 20-period moving average as far as relative strength goes. That could be a good sign. Because actually from the daily perspective, I don't have that chart with me right now. On the energy, we are pulling into the 50-day moving average. So we have some confluence of support taking place. So it makes sense to start building out a position for me personally, for what I like. And then how like I said, I'm building out a floor too. So to minimize my losses, because there's still a strong possibility it heads lower, which we'll get into the oil chart in the commodity section of this video. And if oil heads lower, which who knows if the OPEC gods, right, will let oil fall any further. But we don't know. I don't think that it's going to be allowed to fall much further. I think it's going to continue to move up. I think the floor is right around 50 for us right now, but I'd be completely wrong. That's just really speculative. Another pattern that's forming here on the relative strength is this left shoulder, head, right shoulder. That's an inverse head and shoulder. And what's so good about this chart that we're starting to see this strength is look how down it is from a relative standpoint, relative performance standpoint. So that tells me that it has a lot of room to go if we start breaking back above 0.14 on the relative strength. So if we break above that, oh boy, energy can be a very strong performer. Not necessarily from a percentage standpoint, but from a relative standpoint, it could be a very strong performer, okay? Now, from the weekly perspective right here, bam, it acted as support, we cracked down, then it acted as resistance, now we broke above, maybe we're back testing it right here, which means we can go down to around 45. That makes sense to me. I mean, this pullback, this drawdown is on the 200-day moving average, and you can see it kind of shot itself up there. Not the greatest looking 3-bar pattern right there, right? Strong bullish candle, small little tiny range candle, and then followed through by a very aggressive down week. So that right there is a topping type candlestick pattern. So if we break through 47 or 45, that to me says, yeah, we can head a little bit lower, maybe potentially even to the 50-week moving average. All right. So that is also something to strongly consider. And that's why I'm building out a floor here below this 45, because I'm not willing to take, massive losses. Now, that's just my thoughts. That doesn't mean you go ahead and do it. All right. Like I said, I personally think that it can head lower, but I'm starting to build out a position now. And that's not my only position, by the way. I do multiple different things, and I'm not willing to take gigantic losses because you got to be, before I get into the indices, you got to understand this. You can be right or wrong 5 out of 10 times, right? 5 out of 10 times, okay? That most people would be like, oh, that's not that great. It's like a coin flip. Well, the thing is, what you need to pay attention to is what your risk versus reward is when you're entering into a position. So is your upside significantly greater than your downside? So not only do you need to just be able to pick a good stock or pick a good ETF or, pick a specific trade, you need to know how to manage position size and manage your risk. Okay? It's not going to feel good taking these little small paper cuts, but it's going to feel really good taking small paper cuts and then having one winning trade that launches 30% on you, because you'll forget all about the paper cuts as soon as, the biggest Band-Aid in the world wrapped up in Neosporin, heals you in 2 seconds. All right, let's get to the S&P 500. This is some bullish stuff taking place. Little scary, but it's also bullish. I'll give you both things to consider. First off, we had this rising wedge pattern. It was coiling up tightly, and we said, okay, it's still in this tactical position here, or a little coiling up, building up energy type position. And guess what? We had a strong week, did not break down, it broke out. So 2.71% to an all-time high weekly close for the S&P 500. This was a red line. Now, guess what? It's a green line. Green line represents support right here. So this now is an area of support. What's something to consider? Okay, something to consider is if this does start reversing track and volume starts to heavily increase. Now, if that's the case, be very careful because this could be an exhaustion type break. All right, but as it stands right now, that is one bullish green candle. Not by like that much volume, and it also broke out of this resistance, which now becomes support. So good looking so far, bullish, like straight up. Now the RSI is getting to the overbought section, but that's okay. Hasn't been there for quite some time. It was right over there last time, right here, and then we kind of saw this big drawdown week, and then we came back, big drawdown, and then we came back up, okay? Daily time frame. Only thing that I want to call out here is, obviously we had that big move up, and now we're just tagging the top of the channel, all right? So just be careful here because we're moving into that overbought territory. This seems like very melt-up-y, and I'll get into that here soon in the indicators because this move, bam, we've been prepping for this, right? This is the seasonality script. It's playing out perfectly, right? What do we say? Get ready for April, right? April's been straight up in the air, right? It's funny when people say, oh, I'm bearish. It's like, I was ready. I don't know if you guys were ready, but I've been saying, get ready for April. It's going to move up, right? I mean, it doesn't necessarily have to, but you'd want to prepare yourself in a bullish environment as it hit this 50-day moving average, right? And it was trending up. Going into April, we've been saying like it was clear as day, that we can see some strong moves to the upside. And that's what we're seeing. Now I'm calling out right here, running into resistance. We did the same thing over here. When it hits into resistance, you can see a little bit of some hesitation, all right? So we'll see here how, running into this overbought territory on the RSI, not the greatest volume, and running into this resistance to see what plays out. If we get a massive gap up or something crazy, I wouldn't be shocked to see people sell into that strength, just given the context of the current chart. But we'll see. Maybe it consolidates or maybe it just kind of drags up higher. We will see. Now, another thing I want to call out here is the BP SPX. Okay, it's overbought. Like I said, things could stay overbought for a long time. Doesn't mean that it has to fall back down, right? But we are overbought. The indicator is a little bit overextended. So just be mindful of that if we start seeing some slowdown here very shortly. Now, another thing I want to call out is the percent of stocks above the 200-day moving average. So this is bullish, right? It's this move to all-time highs is being supported by this breadth, right? So the stocks are showing a lot of strength. They're, a large percentage of them are above the 200-day moving average. Now, that's a pretty aggressive move spike to the upside. We haven't been there for a while. And now I drew on some other indicators to show you when we hit that and we kind of come down a little bit, this little tiny pullback right here, right? That was almost 10%. All right, so that was a full-blown correction shortly thereafter. So we hit it, we continued to move higher, then we pulled back 10%, retracing that move. So just be mindful of that. It doesn't mean it's going to happen, okay? But just be mindful of it. Now, same thing right here. We tagged in closely, okay? These are still really high numbers. Right, where did we come to? Wait, no, where am I trying? Yeah, right here. Okay, so right here, we were tagging the 94 to 95 range. Say we pulled down a little bit, but then we shot a lot higher. Well, shortly thereafter, we had a 17% correction. Now, if we get a 17% correction of where the price is right now, that's going to bring us to, I'm not good at math, but I would say 3,600-ish. That's a pretty big, that'd be a scary move to the downside. 20%, is considered a bear market on Wall Street. So just take note that this could also mean that it's overextended. And we're going completely vertical right now. This is an absolute insane move. And once we get into the indicators, I'll show you something that's actually really interesting, worth noting. Dow Jones this one was actually on the daily time frame, looking actually kind of bullish to me, which I talked about. Now we broke out of a rising wedge. It was actually this line. I think it was drawn out why did I delete that line? It was drawn out from right here up, and then we cracked through it, so that's good. Now I just drew out this line slightly because it could still be within this tactical formation, which would allow more upside still in the Dow Jones. I will mark the RSI is overbought here. A little bit declining volume. It's not the greatest. A little bit up week over week in volume, but just still take note, the volume's not like amazing here by any means. So yeah, not much going on, right? Still vertical move to the upside, very disconnected from the 20-week moving average. I don't have the 5 EMA up on here, but we're disconnected from that as well. I want to bring up the transports. The transports are very important to look at. The INDU, the industrials. It's called Dow theory. You can read it if you want to read more about it. We're at the upper range of the Bollinger Bands. We're disconnected from the 13-week EMA I have up. I should have had the 5 EMA up too. We're still disconnected from that. And we're disconnected from the 20. So overall, very bullish context, and we're still within this kind of channel. You can see this strong move for the year, right? So the year opened up right here, this gray dashed line, and we've been completely vertical, just going straight up ever since. So just extremely, extremely bullish nature. From a bearish perspective, we're in this kind of megaphone pattern right here, okay? And we're hitting the top range of this channel. However, look at the context of the chart. The context of the chart is still bullish. Now, I said that these 3-bar candles right here, these small range, first off, it was this big green candle, then it was these small range ones, meaning one thing, or sorry, up to two things, right? Consolidation or momentum is waning. Guess what? It consolidated, we broke out, and now we're heading a little bit higher there. Now we just got to get through this kind of resistance. If this is a megaphone pattern or a broadening wedge, ascending broadening wedge, and it actually plays out to its fullest extent, the target would be 28,500. So that would be a pretty significant drawdown. I think it would be a lot of work to get down there for bear markets, or bear markets to ensue. There's the topping process in markets take time. I mean, sometimes it can be very aggressive, but most of the times topping processes take place. Take a while to play out, I should say. So overall, still bullish. Everything's bullish right now. Nasdaq could be considered. I'm looking at the cues for this, by the way. Potential double top. Okay, we pulled down into here. We're discussing that this looks like a period of consolidation. As long as it holds the 20 EMA, things look good. We started to see a strong week. So not making like an all-time high. I'm pretty sure that at least the comp Q didn't make an all-time high. This looks like it's right about there. I should have looked a little bit closer. But it's up 3.86% for the week, so a very strong week. I want to call out the volume here. I don't know what's going on here. This is weird to me. Just a volume fall off for the most part. It doesn't necessarily mean anything at this particular point in time, but it's just strong movements not being supported by that much volume, which is interesting to me. Here's the SOXX. Now, the SOXX is the semiconductors. Semiconductors make up a big portion of the NASDAQ. I find it's important to look at them just like transport is to the industrials. All right, negative divergence here. We broke down through this tight wedge pattern, and now this is kind of interesting. This to me looks like a little tiny shooting doji star. I don't know what they're called, but to me, I see a strong movement off this support of the 20 EMA after we broke down. Very scary breakdown. Found support right away. Look at all this volume accumulating. Right? You can typically find peaks and troughs when you get these big volume spikes. Like look down here, bam, huge volume right in this area. We moved up. This big fall down, bam, big spikes of volume right here, and we started moving up. So that's not always a guarantee, but I did call that out a few times in some other videos when I overlaid the 10-day moving average to the volume, and that was always interesting. But this is a very small range candle, a little tiny star up here, okay? So a lot of indecision, but then look at the range of the candle from open to close, very small range, which tells me, okay, maybe this move, as it's coming into this breakout point, maybe it's back testing. Now, next week is very critical. If we have a big red candle here, that right there would be considered, I think they call it an evening star, which is a 3-bar reversal type pattern. Still needs to get confirmed to the downside, but this, it would still need to be confirmed to the downside. So it's nothing really to sweat right now. We're still above the 20-week moving average. So everything is still, like I said, in bullish context. You just got to take note of the divergence here, and then also the bearish crossover that's still in play for the price percent oscillator right there. As far as the daily time frame goes, wow, like almost perfectly measured move from this head and shoulder breakout. So we're breaking out now. We're reaching to that double top. There's actually the next chart that I'm going to show you here is actually pretty interesting to me. Now this is a big move for April, right? So potentially if seasonality is still holding true, that means we might get that May sell-off, which we'll get into those seasonality charts here on another brief. But we're just coming up to this area of prior resistance. Last time we were up here, we had a pretty large correction. Okay, so you might want to wait for a breakout. If you want to like trade certain stocks that are in the queues, and that would give you more confirmation that, okay, you know, this move is going to continue, or we might break out, pull back, and then head further. But you never know. This could be, if you get in too early and we get just a reversal right away, you know, it'd feel pretty cruddy as far as the move goes. Now, from a bullish perspective, this is actually kind of cool. So I'm looking at this chart here, and this is the percent of stocks above the 200-day moving average. Okay, and when we're up in these ranges, it's overextended, right? So 86 and up, even the 90s is up, you know, that's overextended move, all right? And you can typically see pullbacks, but I wanted to ignore that for a second and just call out this just important kind of channel that I noticed. So when we're above this 86 marker, or kind of trading in this range up here, you can see here is just chopping around back and forth, all right? And that created this type of bull channel. All right, and then, yeah, it sold off, but ignore that because that's when we fell down significantly during the pandemic. But notice the bull channel, okay? When we finally got back up in this range up here and we kind of just chopped back and forth, like this emotion right here was very similar to this emotion I remember in early 2019 to going into 2020, where the market just kept pressing higher and higher and higher, and it just seemed almost off for some reason. And we saw that here when we were talking about it, and then we started falling down, and then we got that correction. All right, so we did get that correction, but notice the bull channel here. Now, what I'm calling out is we're starting to get back up and potentially breaking out of this area of resistance right here. And if it continues to chop around, that could mean that we're going to be getting the start of another bull channel, right? So that's how I'm seeing it. If we can hold up within these areas again, we might see something very similar to what we saw here, where we start channeling out and even heading higher. It's not a guarantee, so watch for this thing to potentially roll over fast, because sometimes when we get up spikes, okay, especially on insane moves, for example, this move right here doesn't look big, right? That was in June of 2020. That was a blow-off type move that we saw in 2020, and I will show you that on the XVG indicator. Very important moves, but you can see that blow-off top move in the price action was a very big spike up to the upside. Now we're getting a spike to the upside, and this does look like a blow-off top type move as we're moving into resistance. So let's monitor that closely. The next thing I want to call out is the BP NDX. We're overbought here too as well, moving into an area of resistance and an area of resistance on this chart. Okay, so not the greatest place to go long. Doesn't mean that the price can't go higher, but to me, I would want confirmation of a breakout, or, you know, some consolidation of some sort, or something that can like level out these indicators and say, okay, now we're ready for another move. Now we're getting some interesting stuff here. The Russell on the weekly time frame. This to me is interesting because I'm starting to see that, like, okay, it's very bullish market and nothing seems to take it down, but we're starting to see chop here and there in certain areas. And that to me says rotate. Rotate. Everything is rotating. So you're probably hearing more and more people talk about the rotation of different sectors, different indices, different stocks, whatever the case is. But I'm starting to notice that the IWM starts to look really like a distribution phase, like it's distributing and it's like fighting back and forth between the bulls and the bears. And you can see that, you know, first off, not the greatest looking pattern, right? Rising wedge, and we're starting to see very big swings of volatility right here, negative divergence. So it's almost like, okay, are we deciding, are the bulls going to take over, or, you know, or the bulls trying to dump their shares here, or the bears trying to dump their shares here? Like, so for example, if we have, you know, these top-notch institutions dumping shares into the public or retail traders, right? And you're starting to get aggressive swings to both sides that we're starting to dump more and more and more and more, but yet the retail side is buying, and you're starting to get this distribution of swings kind of between supply and demand, just shaking up. Like this right here was straight move up. Bam, no problems whatsoever. Now we're starting to see some interesting stuff take place. Now, I don't know how it's going to work itself out, but right now, as I see it, is IWM does not look like a safe place to be. And then also, I wanted to call out this. I wanted to this isn't no technical pattern. I mean, you might see people do this, but it almost looks like it's starting to arc itself over, right? And starting to roll itself over. So this needs to get corrected, and it needs to get corrected quickly. Now, the biggest holding in the IWM, 20% of its holdings, I believe, is the financials. All right, so that's something to just call out here. So if financials suffer, you're going to see IWM continue to suffer at a greater extent. And the financials aren't doing all too bad. But you got the negative divergence on the RSI, and you have price percent oscillator. Momentum is slowing significantly here. All right, this neckline, this little area of support is critical to what's going on here. This is too early in the process to say this is a topping pattern. So that is not what I'm saying. But what I'm calling out is just take note of how these moving averages are starting to flatten out and potentially cross over. The 200 is still sloping up nicely, and we're starting to get this rounded out move with momentum dying down. All right, then you're starting to see like, okay, this could be an accumulation phase here. Then we saw this markup, bam, buyers, 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 and now we're starting to get these big swings back and forth. Okay, that to me is not the greatest place. That's deciding, it's a decision process. Well, who are we going to break back out and continue this trend and get something nice and bullish, or are we going to start breaking down here? Too early to tell, but it's still worth noting. Now, from a monthly perspective, I'm only going to bring on this monthly chart. We did have this big channel breakout. So from a bullish perspective, this is pretty nice, right? We broke out of it, but it could be an exhaustion break, but it needs to be confirmed. So we had a very interesting type candle right here, right? Large range, a lot of indecision. This month right now, very tight range, just in this body of the previous one. Tight, small body, and then tight range doji right now, but the month is not over by any means. So what's scary to me is if we start falling back down within this channel on increased volume, that could suggest that was a full-on exhaustion break, and then we can, analyze it moving forward after that point. But right now, it looks like it's kind of just trying to decide. Now, also, I'm going to call out here. If you look at this zoomed in effect, this zoom thumbnail, if it rolls over, the 5 EMA I do have up here on the monthly time frame can act as a very good area of resistance. That is at 209.66. So let's call it 210. So if I go back to the daily time frame and we look at this neckline right here, or this area of support, it was resistance and support, support, support. Guess what? If it rolls itself over, that's going to put it right at around 210. So not only is that an area of support right here, but it's also the 5 EMA on the monthly time frame. Also, on top of that, it's this channel trend line. And this channel trend line can act now because it was resistance. It could turn into support. So that, to me, actually makes sense for a long-sided trade if the price rolls down to 210. Now, if it does get down to 210, you want to make sure you have a stop loss. But you could very well find yourself catching a nice bounce to potentially make a lower high or start its progression back upwards. Okay, it's not there. It still has a lot of room to go, but keep an eye out for 210 on the IWM. Yeah, stock market indicators. Let's get into that. I'm going to go through these a little bit quicker. So first off, we're going to look at what are asset managers doing. Okay, we're up on the week, above 80, not overextended, but you can see a little bit more bullish than they were the previous week. Ridex, what are they doing? Up, very, very low right here. Also bullish, so a big bullish shift this last week. As far as sentiment goes, we're going to look at the AAII bulls to bears ratio, another big spike. So even a bigger spike than the previous spike that we called out prior weeks. Okay, it still is not, this, by the way, is not a signal to trade, all right? And you can see the shift up here in the bulls and then a shift down here in the bears. Okay, well, technically shift up, but it is a shift down because I have it inverted. And you can see it's kind of just trending up. It's like this little worm moving its head up here. That is bullish. Now remember, when it's above 2.0, sentiment gets a little bit hot. These levels get breached all the time. So just take note. It could, from a contrarian standpoint, when everyone's bullish, it's almost time to like, okay, let me explain it like this. The biggest trades are typically where the crowd is not at, right? So if like, for example, GameStop, let's just use GameStop as an example. And geez, GameStop, holy moly. GameStop went to like $400 a share. And at $400 a share, would you say that the sentiment around, or would you say that there was more people talking about GameStop at $400 a share, or would you say there was more people talking about it at $4 and $5 a share? All right. My point is this. If everyone was way more bullish at GameStop being $400 or $500 a share, that to me says the crowd is all bullish. And then from a contrarian standpoint is, okay, that trade, it's no longer there, right? And that's not what I'm trying to say, that this is going to fall over like GameStop. So don't get that crisscross. I'm just trying to open your mind up a little bit here. All right. So understand that at $4 or $5, no one was thinking about GameStop then. They were looking at other avenues. All right. And very few people that took those type of trades, you know, they made a lot of money. Were lucky or very smart. I don't know. That's up to you know, interpretation, I guess. But just know that when everybody is bullish, right? When we having these high bullish sentiments, when asset managers are maxed out long, right? Which they're not right now. That to me says, okay, the trade is very bullish. Okay, where's something that's, you know, not. So it would be the reverse, obviously. So just a different way to think. Now, the VIX to me does look bullish. We have the Bollinger Bands contracting, which is a good sign because even if we get a spike up, the resistance level is a little bit lower to me now, right? So yeah, I mean, it's still a larger range and we can get these little spike ups to fill these gaps. But overall, the breakdown, and by the way, we finished the week off at the lowest close for over a year, since February 20-something, probably, right around there. So bullish overall, okay? That doesn't mean that we can't get a Volmageddon spike. But as of it stands right now, Bollinger Bands contracting, heading lower. To me, that says, okay, yeah, to me, that's just, it reads bullish to me, as we've been saying these last couple of days. Now it gets to the interesting part, looking at the equal weighted index, okay? The XVG over here, and we have the S&P 500 up above. Now, I already called out this negative divergence here. That's no news, but we called it out from 2018 and 2020, and then that resulted in some big moves to the downside. But what I didn't go over, and I want to go over right now, is these three horizontal lines on my screen, all right? So first I want to call out the price action. So we had this strong blow off top in June. Okay, that was that. Like, remember June, how aggressive that was? I do, because that, oh my gosh, I almost cussed. That went almost completely vertical, okay? We had the same thing happen in September, straight up and vertical. And then we had the same thing here in November, bam, straight up. Now that was based on seasonality, which was interesting. And you could argue too here in October, but that was coming off of a pretty big down pull tier 2 here, and we didn't get follow through. We rolled back over. So we can use that as an example, but I'm just using these three lines right now. Okay. Now, the first line, blow off top, the XVG, it supported that move. Okay. Bam, equal weight followed through on that move. Okay. When this turned over though, we turned over here too. Now, this move right here, bam, big blow off top, right, was not supported the same way by the XVG, all right? But then it rolled itself over, okay? And then we corrected. So what am I saying here right now? First off, this matched this, okay? Everything looks fine, okay? This did not match this. It was not fine, okay? What's your point? November, seasonality chart, bam, right to the upside, okay? And then continued, and it was followed through with the XVG. So this made sense on this strong move, and this made sense to follow through. This one made sense on the strong move, and it made sense to roll back over. This one did not make any sense. The big blow off top, but it was not supported by the XVG, and it rolled itself back over. Well, we're getting a move very similarly. Are we being supported by the XVG? Well, November was based off of seasonality. And then right here, we got supported. Here we didn't. This move is as strong as these moves. It is. It's completely vertical. But it's not being supported by the XVG. We have a negative divergence right here. So that, to me, is a big warning sign. Doesn't mean that it cannot get corrected, mind you. All right? So take note. This can change, by the way. This can shoot higher, and that would be even more bullish, right? Doesn't mean it can't roll itself back over, but just take note that the move currently is a pretty aggressive move to the upside, and it's on a negative divergence. And it's not being supported by that, as we've just pointed out, okay? Take what you want from that, but to me that just says be bullish, but be cautious. Now, the XLU over the SPY, we are back down into a risk-on environment, just so you know, okay? We're back down below 0, and then the lumber to gold ratio is clearly way above 0 now because lumber has went to infinity, I believe is the proper terminology. Now let's get to commodities. I'm gonna be going over a few here, including Bitcoin for all them hodlers. Commodities, gold. Gold saw some strength. Okay, it's actually seen some really strong strength since last week where it was a very severe down week, but then recovered to a nice big hammer candle at the bottom range of this channel, and we saw some follow through. Not the biggest range candle, but it's good overall. We're finding support right around 61.8 retracement level at right about 1692. So we'll see how this goes. Gold still has a lot of work to do to make up for its losses and to get out of this trend, right? Lower lows, lower highs. Price percent oscillator is kind of crossing itself over here. So we'll see. We'll see what goes on. Silver, weekly time frame. We got 22 to 23 area of support, and we have 29 to 30 as an area of resistance. We are below the 50-day moving average. Sorry, 20-day EMA, and we are above the 50-day EMA. So we found support right there. We bounced above. Now we're kind of trading within that channel, and we have a slight falling wedge pattern. That could be good, but we need to get confirmation. The price percent oscillator right now doesn't support a breakout, but that can change. And what's nice here is the RSI is back above 50. It's at 51, so it's kind of just trailing along. It'd be nice to stay within that range to support a higher move in the future. CRB index, okay? Commodities. We broke out of this 2-year channel on the weekly time frame, got overextended. Okay, we call that out, right? It's like, okay, just pump the brakes. Just like we say pump the brakes with the equities, I say the same thing here, right? Even if I'm bullish bias or bearish bias on certain things, I say the same thing because it just makes sense to from both perspectives. All right, now this is a bullish breakout, got a little bit overbought. We're pulling down slightly. We're having some interesting price action here, right? The pull down, but yet bulls keep stepping in right around 182, 183. Yeah, 183, I'd say. You can see these lower wicks that are kind of building strength. Now, if we crack through that, we have the 20 EMA as support, and we have the back test of this trend line. Right now, this to me looks like it's flagging out. So we'll see. We'll see what we get here. But I like commodities. I would love commodities down here. One thing that I want to call out is the price percent oscillator. Looks like it's about to start crossing over and be pretty bearish. That can suggest a move a little bit lower, but that really depends on what the dollar is doing, which we'll get into here momentarily. The dollar and the CRB index move very similarly for most of the part. So if the dollar goes up, CRB can go down. If CRB goes up, the dollar will go down. Yeah. All right, let's see. WTIC, crude oil. This is important, okay? This is why I was talking earlier in the thing about the energy sector. Whew. You still with me? Jeez. I do these, they're too long. So I can't do power charting section today, so I have to do, because it's a little bit longer for the weekly recap, but I do plan on giving out some charts here momentarily later on, probably Twitter or something like that, and Instagram. So we had this resistance line. We broke out of this 2-year trend line, hit area of resistance 65 to 67. Resistance here, resistance here, resistance here. It made sense. We got overbought. We call that out, and we started to see this down pull. Now we're starting to see these lower wicks, build up. But to me, this supports energy going higher. I feel like, yeah, resistance. Now we're back testing, and then we head higher. That to me would make sense from multiple perspectives, not just from a price action and technical perspective, but from a monetary policy perspective and how we're targeting higher inflation perspective and just seeing how the dollar has been acting perspective. I'm looking at multiple things. Okay, I look at a macro view, various intermarket approaches, and then I start breaking down the price action and start flooding into sectors that make sense. Price percent oscillator crossed over, that's bearish. So we'll see here if we have more downward side. Like I said, I don't think that they're going to allow, I think 50 is the floor. If we go down to 50 and you're not buying down there, whether it be energy stocks, energy sector, crude oil future, whatever, whatever you trade, I feel like that's going to be just a killer opportunity. I wouldn't want to miss it because it makes just like the perfect risk versus reward trade, in my opinion. Now, what's even crazier about that move is if I go from right here, 35 to 65, all right, how big of a move is that? 35, 45, 55, 65. $30 move, all right? What makes so much sense to me is if we go down to 50, because that would be a 50% retracement of that move. And when you get 50% retracement moves, like from a big bull pull like this and it comes down, that to me is also in confluence with the fib 50% level. So you have even more support in this move. And that would be just like a pristine entry point for some long, for all kinds of different strategies, you know, whether you trade options or, you know, if you want to get into like a ticker symbol like GUSH, G-U, I think that's leveraged oil fund, energy. I can't remember, but yeah, so I'm just rattling on. Let's get into Bitcoin. Now this, on Twitter, I flipped this chart upside down. Why did I do that, and why did I hide what it was? Well, I want to open people. I wasn't doing it to trick anybody. I was doing it to just kind of open your mind a little bit, because a lot of people are like, when you have a biased belief, like, okay, Bitcoin, no matter what, it's going up, right? And it has been, right? Or if you're like, buy the dip, you know, and you just buy the dip of anything because it makes sense to. And a lot of the responses were actually intelligent responses, right? They were like, well, wait for confirmation. Well, if it cracks above the 50, and it was inversed, right? I flipped it upside down. So if it cracked below, or yeah, below the 50, which they thought it was above, then, you know, you could potentially go long, which would mean that you would short. All right. So that made sense. So to me, when I say, okay, now it's Bitcoin. Okay. So I want you to understand, if you're thinking, well, okay, it's Bitcoin, so just go long, which means if you were to go long in the chart that I showed you, you would have gone short. And a lot of people said, yeah, lower highs, technically it's higher highs. It made sense to go short. Now, if you said go long and then you were a bias to Bitcoin, right? Then you would have been like, oh, no, short it for sure. You know? So the reason why I do that is because it allows to take out a little bit of emotion, and it allows you to view something a lot different, and it kind of expands the mind and the way of thinking. It's just a little practice. You can do it yourself by, if you go to stockcharts.com and you just write minus $BTC USD, it inverses the chart automatically for you. So all you have to do is write a minus in front of the ticker symbol, and it flips it upside down. And you can be like, okay, would I go long there or would I go short there? Well, most people want to go long Bitcoin, right? Okay. Well, if you flip it upside down and all of a sudden you say, oh no, I would actually buy that dip. It looks like it's going to break out. Well, that makes sense. But then you can also think from this perspective, you know, if it got down below 50,000, which many people said, if it got below the 50-day moving average or 50,000, I would enter into the position long, but that was inverse. So that means you would say you would want to get stopped out right there if you were actually long Bitcoin, right? And if all of a sudden your view changes and you're like, well, no, because I plan on holding it for the long term. Oh, okay. Because now it's not about the price action and being, you know, now it's about a narrative. So it's just something to think of. Right now, the only thing that scares me here about Bitcoin is the momentum of it is just dying right here. Now that can be changed very quickly. And look at this candle. This would suck a lot if this is a fake out move to the upside, because that was a strong green candle breaking back above 60,000, and now it's back down and reversed. So what a false breakout that would be if we start heading lower. That would be probably the most irritating for anybody right there, because that to me looked like a solid breakout to begin, although it wasn't quite above that 62,000. If we get above 62,000, like I said though, man, this thing could, yeah, this could push higher, that's for sure. But yeah, just overall, as far as technical standpoint goes right now, bullish context still. Just notice the price, the momentum is slowing right here. We do see the RSI upturn, and we did attempt to break out right here, which we very well may be back above very shortly, and then we could take out 62,000 and head higher. So good looking so far. Dollar. Let's look at the dollar. This to me was a bullish breakout. These three candles do not look good. That is evening star, big bullish breakout, shooting star type candle, inverted hammer, wolf candle, whatever you want to call it, followed weak by a big red nasty candle still above 92. So if we get confirmation close below 92, I would expect it to go like this. Boop, drop down, maybe potentially back test, and then blah, 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 and then potentially head lower. You know, there's some people that say dollar's going to crack below this low very shortly, probably this year, which would be crazy because that means the dollar can drop to like 86, 87, 85 very quickly. But as it stands right now, bearish 3-day candle, bullish breakout, need confirmation. And then from a daily perspective, you know, it's just interesting to me. Just watch how the dollar was moving up. We saw some strength here, but we're in resistance. And then look at what takes place when it reverses. The S&P 500 breaks out. So the correlation here is still just stunning. So if we start breaking down further in the dollar, that to me suggests that the trend to the upside is going to remain for the S&P 500. You know, it just seems that way. And if we have a complete dollar collapse here, why wouldn't the markets continue to press higher? So even if the market, now this is where it gets interesting, folks. If the market continues to press higher and higher, but the dollar continues to lose more and more value, are we actually making money here, or are dollars becoming less and less valuable? So we need to really take a look, you know, at everyday items that we purchase, right? And how are we going to keep up with the increase in prices? There's actually a good website called the Chapwood Index. I first learned about that on from, where did I learn that from? Dang it. Dang. Where did I learn it from? Quote the Raven podcast is where I heard it from. And he talked about the Chapwood Index. I brought it up. I was like, wow, this is actually amazing to track, you know, regularly purchased items, like a basket of 500 items that you can track and watch in various cities and see where, you know, the prices go up or down or whatever the case is. So just interesting stuff. Let's look at bonds and yields. What are they doing? Nothing. They're not doing anything right now. They are slowing down. This we called out because we were looking at the TLH. This to me makes sense. Now, there's a couple ways to perceive this. Is it rolling itself over and going to continue its trend down? Or are we going to consolidate here? That is yet to be seen. So we do not know. If it starts cracking below 1.6, I don't see why we can't head lower. That would make technical sense, but it's just not a for sure as of right now. And this pause, this to me, oh man, this is like, okay, it's go time for some critical trades here. Because if this is where we top out for here and the dollar starts heading lower, precious metals, gold, silver, miners, get ready for them to start breaking out, especially when we've seen that the August low was the gold top for the 10-year. And then it started this, and then gold continued to head lower. So if this, notice how it's curling itself over here, the 10-year. Notice this slow momentum. What's gold doing? Slow curl. That slow momentum. Correlation. Important one, right? Okay, and then not to mention the dollar, which adds a lot of fuel to silver, gold, you know, so we just keep watching these correlations kind of play out. Doesn't mean for sure they're going to hold on a day-to-day basis, but we can see here from August to here, it's making sense so far. Then we look at the TLH. The TLH, we got really overbought. We're pulling in 61.8 retracement level. We said, all right, this to me looks like an area where it's going to take a little bit of a breather, trek sideways, maybe potentially bounce. I think that the upper side resistance is going to be 144.88. I can see us going up that level, and I can see yields dropping a little bit further. That to me would make sense. I'm looking at the TLH, which is the 10 to 20 year. You can look at the TLT. That's more widely tracked. I probably should actually just start using that. RSI is still oversold, which still tells me like, okay, we might truck around in here, this little channel, but I do think that we can easily, since we broke down through here, we can go back test that, and that could be an area of resistance right there. So 144.88 would be the target specifically that I'm looking at to potentially hit. That means that yields would potentially head a little bit higher, and that would set us up for gold and silver to move a little bit higher, but not to the point where it would break out necessarily of these channels where they're at currently right now. All right, so let's wrap it up. Conclusion, this was a long video. First off, everything is very bullish, all right? So not much has changed from that perspective. We're seeing a lot of strength, but we're starting to see more overbought internals take place, all right? From the BP charts to coming into an area of resistance. Now, I am seeing weakness in energy, and energy's got my eye. I'm starting to build a position. What I would personally like is to see both the CRB index and crude oil head just a little bit lower from a weekly perspective to backtest their breakouts, confirm that they can hold this support, and then get in. Energy. If this is an inverse head and shoulders and we come back curling up and this 20-period moving average holds this support and we break out of this neckline, energy will be a top performer, I think, actually for the entire year and going into the end of the year. From a relative standpoint. But that's what my eye's on. At least that's the hot part that I'm on right now. Now, that doesn't mean that, by the way, that doesn't mean that I'm not going to be looking at other sectors and buying into individual stocks. I did show on last market brief my power charts, and I want to keep on continuing to show some power charts out there and create trades around them from a good risk versus reward standpoint. So keep an eye out for that. All right, everybody, that's all I got for you. Have a wonderful week and see you back. Have a wonderful weekend, and I'll see you back next week.